Have you wondered how is it that the United States stock market continues to hit new highs every day? Surely the companies are not performing that well. In fact, if anything, recession clouds are gathering over the United States, then what is it that is happening? Well, one explanation is what I'm going to tell you, that money from the Eurodollar investments is making its way to a more stable place, which happens to be the United States stock market. But this is just one part of the big picture. What is the Eurodollar? You may want to know this. There isn't any currency called the Eurodollar, and in fact, it's not even connected with euro. It's a concept. And I'm going to explain it to you in as simple words as possible what this Eurodollar is and how it is under a lot of pressure, because this affects banking in every country outside of the United States as well as the United States. So I have a small infographic to share with you. This is slightly different from the slide deck that I normally do. It flows a little bit differently, that's all there is, but the story narration is still the same. So a small request to all of you to please like this video, and if you have not already subscribed to our channel, do subscribe to our channel. Here we go.
Diagrama is a magic and unique place with an overwhelming history.
Diagrama is the most inspiring place I have ever visited. I am grateful to all.
The Eurodollar market. Understanding the global dollar system under pressure. Why is this under pressure? Well, we have to go back to Second World War. What happened after the Second World War? Germany was completely decimated. Britain was bankrupt. So was France. So was Japan. Some of the more developed economies, they were all completely decimated, and they were picking themselves up from the ashes. Now, what happened at that point of time was the United States, having been the one whose currency was going to be the reference currency for the world, remember Bretton Woods Agreement, they decided that they will start giving money to some of these countries who wanted to pick themselves up. As a matter of fact, Britain had a very difficult time negotiating a deal with US because the loan was pretty stiff terms. This is under Truman, if I remember correctly, and it was a big rancorous deal. I think the last payment from the United Kingdom to US was in 2006 or something like that. It took a long time for the United Kingdom to pay down the money that it borrowed from United States. And the same way, there was a thing called the Marshall Plan that allowed for Germany to pick itself up, and there you had, Germany split into four parts. One part was being managed by Russia, the other three coalesced together to become the Federal Republic of Germany. Of course, in the 90s, they all became one single entity called as Germany, but that is more recent time. This thing goes back to the post-World War II days. Now, what happened at that point of time was, so countries that had dollars in their hands would pay for the things that they would buy from the United States in terms of dollars. So then they had their local currencies, but the dollar was almost always in the picture. So in order to do short-term deposits, they started using a method called as Eurodollar. It is something where the rules have to satisfy four conditions. What are the four conditions? I'll come to that in a moment. But the size of this market, Eurodollar market, it exceeds $13 trillion. The most important thing that needs to be kept in mind is the dollars that are being used in this ecosystem, those are not regulated by the Federal Reserve of the United States. In other words, this is outside the control of the Federal Reserve and as well as the United States government. Although there are no dollars being actually moved, it's a deposit, and that is the way that deposit is being mentioned is a dollar. Money didn't move, okay? But this is where things get really interesting. There are four things that need to be satisfied for something to be defined as a Eurodollar, and I'll come to that in just a second. First thing, the Eurodollar is not a physical currency. It is a US dollar denominated deposit with four key characteristics that it has to satisfy. Number one, it has to be held in a bank or branch located outside the physical boundaries of the United States. It has to be outside the United States. Number two, the deposit is always denominated in US dollars, not the local currency. Third, regulation not subject to US Federal Revenue Reserve requirements of or FDIC insurance. What this means is if you have a bank deposit in one such bank and you happen to be having dollars, and if that bank goes belly up, the FDIC insurance of $250,000 per account does not apply. In other words, this is unregulated. This is not under, even though it's a dollar account that you may be having in one of these banks, the bank goes belly up, you don't have any luck. Fourth, it forms a global wholesale market for corporations and banks to lend and borrow US dollars. For the longest time, this has been working well, okay? And I'll tell you where things started going south. So how does this whole thing work? How does the flow of offshore dollars work? First thing is the market acts as a chain of intermediaries, and in moving the US dollars from savers to borrowers across the globe, from various countries, across various countries. For example, this is one example. I'm not trying to say that this is what happens all the time. Original lender is a multinational corporation. It could be Acme Widgets Incorporated, and it has excess dollars because it sells products outside of United States. It has excess dollars. Now, what happens is it puts this money in an intermediary bank, let us say A in London, and it accepts, this bank accepts US deposits, and this company, Acme Widgets, puts the money in this bank because it is giving it a higher interest rate. It has to be kept in mind that any euro-dollar operation will have to have higher interest rate than what is prevalent in the United States. So whenever the United States starts raising its own internal interest rates, this starts applying pressure on these euro-dollar banks system because they need to give even more interest rate than that in order to keep the deposits to themselves. You get that idea, right? Now, what does this intermediary bank A do? It will, lend that money to another bank, maybe intermediary bank B in Singapore, which needs this US dollars, and in exchange, it might give a slightly higher interest rate. Nothing wrong in that. Then what happens is, finally, somebody who really desperately wants dollars, hint, hint, which country this is, that person is going to get the US dollar for a transaction. Of course, between these two intermediary banks, you can be sure that the percentage of interest will go up a little bit more, and so on. So now, what are the three major pressures that are facing this particular system, euro-dollar system? The first one is the aggressive US monetary policy. Remember, viewers, monetary policy is something that the Federal Reserve sets, and that is the interbank lending rate. Right now, it's, I think, between 4 to 4.25%, and this used to be much higher, and that's what this graph tells you here. In 2021 Q1, Q2, and Q3, it was a very, very low number at 0.2%, and then from 2022 Q3, see how it started jumping? It went all the way up to here, 5.33% in, that is 2023 third quarter. Okay, and it has remained more or less at that point. And this is one of the things that Trump keeps screaming at Powell, saying that you need to lower the interest rate, lower the interest rate. Well, he has lowered it a little bit, just 0.25%. Now, what happens is when this is so high, then people who are keeping their money in the euro-dollar system may start thinking, if US banks are themselves giving this kind of high interest rate, why should I keep the money in a dodgy Europe-based bank? Sorry to use a dodgy word, but that's how people compare. Money or capital always flies to the place where it has the safest place. I mean, that's where it thinks that money is safe. So money is moving from Europe to United States. Not only that, there is this is the other thing, flight to quality. During global uncertainty, like now, because the Russia-Ukraine war is in its third year, and hopefully with Gaza settling down, You never know about this, whether it will settle down or not, whether that the tempers might be coming down a little bit. But be that as it may, there is global uncertainty today, and our investors are seeking safety. This drives a massive flow of capital into US assets, putting liquidity out of the riskier, unregulated Eurodollar market. The reason I'm saying unregulated is because it is not under the purview of the United States federal banking system, and it is still playing around with dollars. What are the numbers here? If you look at the US dollar, that's about 59%. The next big one is the euro, about 20%. The third one is many share of global foreign exchange reserves, about 11%, and so on. Now, what else is happening? There is a heightened systemic risk. As an unregulated interbank market, trust is paramount. Trust is paramount. Remember, I told you about how people are saying that in banks such as in France and in other Europe banks, that the money that has been frozen of Russia has been used up, and they have been saying, no, 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 the principal is there, but we have only taken the interest out. But essentially what it means is that because of this situation where the European banks are finding it hard to raise revenues, they are probably trying to get their hands at money that they have access to, which is the frozen Russian fund. This is, of course, riling the Russians no end. But take a look at the Eurodollar futures notional value. I told you it is about 13 trillion, and compare it with S&P 500, which is around 4.2 trillion. There is no comparison. Now, you can't see it on the screen, but I can see it. I'll fix it next time around. So there is no comparison. So what is going to happen next is there's going to be even more pressure on the euro dollar, and we have to wait and see how it unwinds itself. But now you are seeing why the United States wants to separate the dollars that could be sloshing about in this euro dollar system and trying to treat that thing separately from what is inside the United States. Hence, a dual dollar. This is just my connecting of the dots. I could be wrong, of course. I'll be bringing in more experts, and we will keep talking about this. This is going to happen. It is happening slowly but steadily, and we'll wait and see how that plays out. Thanks for watching. Please like, share, and subscribe to our channel. Don't forget to click on the bell button for notifications. Namaskar.